Namaste, my dear friends. In the last class, we referred by discussing elaborately the concept of exempted supply of services under the GST. In this regard, in the last class, we referred entertainment sector, sports sector, followed by the transportation of passenger sector. Now I am referring to you tour and travel sector. What are services qualify for exemption under the tour and travel? I am now going to bring to notice for a kind consideration. One by one presenting here as follows, my dear sir. Tour and travel services, where services by a specified organizations in respect of a religious pilgrimage facilitated the government of India under the bilateral agreement or arrangement are exempt from the payment of the GST. What do you mean by specified organizations which you are referring here? It should be like this, which is none other than Hajj Committee of India or Kuman Mandal Vikas Nigam Limited of Government of Uttarakhand undertaking. If these organizations involved to provide tour and travel services to our pilgrims to perform their worship, having a bilateral agreement by the government of India with the other country. In the case where when you refer our Muslim brothers is to go and perform Hajj and Umrah services in Saudi Arabia, where the government of India has a bilateral agreement with the Saudi government to permit our Indians to perform their worship, Hajj and Umrah services. Similar to that, our Hindu brothers is to visit holy place, Lord Shiva, Manas Sarovar, for taking the blessings of the Almighty. The government of India made a bilateral agreement with the other country, China, Tibet, to permit our Indian pilgrims to have the worship in the holy place. So, in that case, if these organizations, namely Hajj and Umrah services purpose, Hajj committee, or for taking the darshan of the Almighty Lord Shiva at Manas Sarovar, the service offered by Kuman Mandal Vikas Nigam Limited qualify for exemption if they offer the tour and travel services to our Indian pilgrims. Qualify for exemption. Further, my dear friends, if you refer here, tour and travel services offered by Indian tour and travel operator to foreign citizen in foreign country. Though the place of supply may be in India, location of supplier may be in India, it may be interstate supply. In spite of that, it is qualified for exemption. Example I will provide to you here. Look here, I am Mr. Nambiar, tour and travel services, offering the tour and travel services at large. One fine day, one Mr. ex-president of USA, Mr. Obama, called over phone. I wanted to visit Sri Lanka. Can you able to provide tour and travel services? Then Nambiar Tour and Travel from India said, absolutely will provide the tour and travel services to you, sir. And Nambiar Tour and Travel Services, who has place of business in the state of Kerala, offer the tour to foreign nationalists, namely ex-president of India, Obama, where offered the tour outside India, namely Sri Lanka, Colombo. In that case, such services rendered by Indian Tour and Travel Operator absolutely, wholly exempted from the payment of the GST. Now the doubt arises, sir, what about if the same Nambiar Tour and Travel Services who has the place of business in the state of Kerala offer the tour and travel services to foreign citizens in India absolutely attract the GST. No doubt attract GST. Wholly offered tour and travel to foreign citizens outside India, wholly exempted. Now the doubt arises, what about partly provided in India, partly provided outside India? Whether it is qualified for exemption or not, that is important to note. For example, Mr. ex-president of USA, Obama said, "Hey Mr. Nambiar, I want to visit New Delhi as well as Colombo. Can you offer the tour?" Nambiar Tour and Travel Wala said, "Obviously sir, I will offer the tour to you." So partly in India, partly outside India. In that case, the law of the land here says, circular of the CBSE specifically says that by following the particular circular, accordingly, the supply services outside India to foreign nationalists by Indian tour operator qualify for exemption. Proportionate exemption can be granted, meaning thereby partly in India, partly outside India, tour and travel services are offered by Indian tourist to Indian tour operator to foreign tourist, partly in India, partly outside India. Who offered? Indian tour operator. To whom offered? To foreigner. Partly in India, partly outside India. In that case, how to be qualify exemption, which has been explained with the help of a particular circular by the CBIC. Here it is stated that tour operator services which is performed partly in India and partly outside India, supplied by a tour operator to its foreign tourists to the extent of the value of tour operator services which is performed outside India is exempted from the payment of the GST. That means to the extent performed in India will attract the GST. No question of exemption. Wholly conducted in India, taxable. Wholly outside India, exempted. Partly in India, partly outside India, tour operator offer the tour to foreign nationalist. In that case only, this provision will come into picture. In that case, simple my dear, I am bringing to a notice like no lollipop manner, example by example. Just look and understand the subject. Example 1. If you refer here, you understand the example 1. Look here, example 1. Nambiar Tour and Travel, Cochin, Kerala, in India. Offer the tour operator services supplied to whom? To Mr. Trump, ex-president of USA, a foreign tourist. Were offered 3 days in India, 2 days in Nepal, partly in India, partly outside India. Total consideration charged, entire consideration is 1 lakh rupees received. If so simple, partly in India, partly outside India. To the extent of partly in India, taxable, partly outside India is exempted. That is 1 lakh rupee multiplied with 2 by 5 is outside India, 3 by 5 in India, 2 by 5 outside India exempted, 3 by 5 in India is taxable. So what is exempted? 1 lakh, take your calculator, tell me 1 lakh, take the calculator, keep in your hands. 1 lakh multiply by 2 divided by 5. 2:5 means divided by 5. 40,000 belongs to Nepal out of this value. So that proportion qualify exemption. Balance 60,000 taxable. Look here. In the case 1, exemption is rupees 40,000, taxable value is rupees 60,000. Any doubt in the given case? Please clarify to me. In the given case, any doubt? Any doubt? सर सोलूंगा सर, चप्पाली सर, माట్లాడాలి सर, पेसनु सर, आप बोलना पड़ेगा, सुनना पड़ेगा. हाँ, you have to interact with me. चप्पंडी, सोलूंगो. Got clarity? Any doubt? Hope that no doubt. Am I right? Fine. Good. Moving on to example 2. What is the example 2? Some little bit complication. Example 2. Same Nambiya Tour and Travel Operator from Cochin, Kerala, providing tour operating services to Mr. Trump, USA, foreign tourist. Where they are provided now? 2 days in India, 3 days in Nepal. Enter fee 1 lakh rupee. Simple. 2 by 5 taxable, 3 by 5 exempted. 3 by 5 1 lakh 60,000 exempted. 2 by 5 40,000 is taxable. Here only should be understand. Not simply blindly apply. Here there is a concept. There is a concept. In the circular, they said, whichever is less, that is important to note. They said here, provided that value of the tour operator services performed outside India shall be such proportion of the total consideration charged for the entire tour which is equal to the proportion which the number of days for which the tour is performed outside India has to be the total number of days comprising the tour, or 50% of the total consideration. Whichever is less only qualify exemption. That is very important to note. Even the first example, if you refer, first example here, I blindly said by saying that, sir, 3 by 5 taxable, 1 by 5 is, 1 by 5 here is 2 by 5. 2 by 5 is exempted, 3 by 5 is taxable, I said. But you have to understand here, 2 by 5. 2 by 5 of 1 lakh, how much? 40,000. 40,000 or 50% of this consideration, 1 lakh, whichever is less. 50% of 1 lakh, 50,000. 2 by 5 of 1 lakh, 40,000. 40 or 50, which is less? 40,000, which is exempted, I said. That I have to say. That I have to say. Because it is a clarification given by CBSE by way of circular. Further, if you refer here, case 2, example case 2 is same type of a example but slight deviation. Nambiya Tour and Travel Operator, Cochin, Kerala, provide the tour and travel services to whom? To Mr. Trump, USA, foreign tourist. What is the value of consideration? 1 lakh. 2 days in India, 3 days outside India. 3 by 5, 1 lakh. 3 by 5 on 1 lakh, 60,000. 60,000 or 50% of 1 lakh. 50,000. Whichever is less is exempted. Which is exempted here? 50,000. Balance out of 1 lakh, 50,000 exempted means balance 15 taxable. Be careful. So the tour offered by the Indian tour operator to foreign tourist, partly in India, partly outside India. What is the proportion outside India? Compare that with the 50% of the total consideration. Among the two, whichever is less is exempted. Balance fully taxable. Further, example 3. Example 3 here, bringing to a notice. Example 3. Nambiya Tour and Travel Services, Cochin, Kerala, provide the tour and travel services to Trump, USA fellow, a foreign tourist. 2.5 days in India, 3 days in Nepal. Now, what is to be exempt here? 1 lakh multiplied with 3 days outside India divided by 5.5 days. If that is the case, you will get 54,545. That you compare with 50% of 1 lakh, 50,000, whichever is less. Which is less here? 50,000. So here exempted is 50,000, balance 50,000 is taxable out of the 1 lakh. Is example 3. Coming to example 4, we'll get some clarity, more clarity. Sir, in the given case, Nambiar Tour and Travel Operator, Cochin, Kerala, provide the tour and travel services to Mr. Trump, USA fellow, a foreign tourist. 2 days in India, 2.5 days in Nepal, 2.5 days in Nepal. Enter fee 1 lakh. Now, if it is 0.5 and above, convert into 1 rupee. I mean to say 1 day. 1 rupee means 1 day. Here, that means less than 12 hours. Ignore it. 12 hours and above, 1 day, convert it. Who said, sir? Refer here. In the circular, provided further that in making the above calculations, any duration time equal to or exceeding 12 hours shall be considered as a full 1 day, and any duration of time less than 12 hours shall be taken as a half day. Not ignore it, you take half day. Less than 12 hours, half day. 12 hours and above, 1 day. In case where if the tour is conducted outside India, not in India. If in India, actual number of hours you take. They said, provided further that in making the above calculation means the above one. What is the above one? This particular above calculation is for what? Performed outside India. Tour performed outside India. So, the tour performed outside India, 12 hours and above, 1 day. Below 12 hours, half day. If in India, actuals, do not round off. Taking that spirit into account, example 4 will crystal clear this particular concept to your kind for you, my dear friends. Now, in the given case, example 4, in the given case, Nambiar Tour and Travel, Cochin, Kerala, providing the tour and travel services to Trump, USA, foreign tourists, 2 days in India, 2.5 days in Nepal. 0.5 means 12 hours. 12 hours and above, 1 day. Therefore, 2:3. So, 3 days Nepal, 2 days in India is the meaning. If so, entire consideration 1 lakh. 1 lakh multiplied by 3 by 5. How much comes 3 by 5? 60,000. 60,000 or 50% of 1 lakh. 50,000, whichever is less. Which is less? 50,000, which is exempted. The balance 50,000 is taxable. Is the way in which the clarification given by the CBSE with regard to tour and travel services offered by tour operator to a foreign tourist, partly in India, partly outside India. The major point here is, if it is 12 hours and above, convert to 1 day. If it is conduct outside India. If it is below 12 hours, consider that half day if it is conduct outside India. What is exempted? It will be identified by applying number of days outside India divided by total number of days on total consideration. That value compared with the 50% is the value of the total consideration. Among the two, whichever is less is the amount qualified for exemption. Whichever is less is 50,000 here. 60,000 or 50,000, whichever is less. With this tour and travel services completed, now I am moving on to transportation of goods sector. Transportation of goods. Goods transportation. Is it exempted? Exemption is there. Goods transported by road. Like this. Goods transported by road. Like this. Are best way to carry on your shoulder. No tax. Reason they said here, goods transportation by road exempted from GST except GTA and except courier agency. That means GTA is taxable nature if not qualify elsewhere. Courier agency is taxable nature. That means to say that GTA means what? Vehicle, goods carriage vehicle, transport the goods. You tell me, my dear friends, if I want to transport my two benches and one my sitting chair from one location to other location, is it possible for me to transport on my head? I should obviously take the help of the vehicle. In that case, the GTA services, then taxable nature not qualify exemption under this category. Transportation of goods sector is by road exempted other than GTA, other than courier services. What do you mean this? GTA means attract the GST, not qualify exemption here. That's why I mentioned in a particular rickshaw, which is not a vehicle, not a motor vehicle. Bullock cart, not a motor vehicle. There are no vehicle at all, only human being carrying the goods. So, is the way in which when we started to criticize this particular exemption, CBSE came with the clarification. Hey, Mr. Criticizer, do not think in a simple manner. Goods transport by road exemption, I said other than GTA and other than courier agency, perfectly correct. In which situation you will able to get benefit here means in the case of a GTA service, when I say what is GTA here, supplier of supplier supplier should issue consignment, supplier should issue consignment note for transportation of goods. Supplier issue the consignment note, then such a supplier we call them supplying goods transport agency services. Suppose transportation of goods but consignment note not required to issue. Transportation of goods in a vehicle by road. Consignment not required to issue. If the consignment not required to issue, such a service not a GTA service. Such transportation of goods in a vehicle obviously qualify exemption under this category. Transportation of goods by road, where if you use for transportation vehicle, consignment note not required to issue by the vehicle. In that case, that vehicle operator not providing GTA services. As long as not GTA services, as long as not a courier services, this particular transportation of goods in that vehicle obviously qualify for exemption. Meaning what? The meaning as follows. In your material it is there. In your page number 91. Look here. A particular tripper. This tripper is operating within the premises of a particular quarry. Let us say there is a particular mining area which is 100 acres of land. Mining taking place one place, extracting that particular what we can call natural resources and bringing to a particular different place within the compound walls of the particular mining area. In that case, question of issue of consignment does not arise. In that case, such transportation of goods in that truck, in that particular tripper within the compound walls of the mining area is qualified for exemption. If it's transportation of goods, similar to that, a particular small vehicle carrying the goods within a smallest location within the city, from Mylapore to Mount Road, Mount Road to Egmore, Egmore to Velachery, Bellacheri to Rayapeta, like that movement within a city, smallest distance, transportation of goods, where consumer note not required issue. In that case, that transportation of goods in such vehicle is qualified for exemption. CBSE said in the given case. Individual truck or tempo operators who do not issue any consignment note are not covered within the meaning of the term GTA. As a result, the service provided by such individual transporters who do not issue a consignment note is exempt from GST. Now come back. Transportation of goods by road other than GTA, other than courier agency is qualified exemption. What about transportation of goods in a vessel by inland waterways, namely national waterways? It is passing through national waterways. See, a vessel carrying the goods through a particular river from, let us say, Kottapuram to Kollam through West Coast Canal, transportation of goods through a particular river. In that case, also qualify exemption. Transportation of goods through inland waterways are also be called national waterways. Qualify for exemption all type of goods transportation. Qualify from exemption. Transportation of goods in a vessel through inland waterways, also called national waterways. Simple to say, through a river, not through ocean, not through coastal waterways. If the goods transported through coastal waterways, for example, from Cochin port, to Chennai port, it means from from the Arabian Sea to Bay of Bengal via Indian Ocean. In that case, not a inland waterways, coastal waterways. Such transportation of goods through coastal waterways not qualify exemption unless the specific product is specifically qualified for exemption. Meaning thereby transportation of goods in a through a river through inland waterways exempted. Transportation of goods through coastal waterways is not specifically exempted to all type of goods or few goods only exempted. What are they? I will explain to you right now. So you should have to have differentiation between transportation of goods in a vessel through inland waterways, transportation of goods through in a vessel through coastal waterways. Through coastal waterways, only specified goods are exempted. Through inland waterways, all type of goods are exempted. Now coming to the point further, if the goods transported in a vessel through coastal waterways from Chennai port to Port Blair port, from Port Blair port to Chennai port, transportation of goods is all the goods not qualify for exemption. Only few goods are qualified for exemption. What are those few goods? By naming one, relief material, defense material, military equipments, newspapers or magazines registered under the register of newspapers, agricultural produce, milk, salt and food grains including flour, pulses and rice exempted, organic manure exempted. These products only exempted if you transport in a vessel from Chennai port to Port Blair port, namely passing through ocean. Only specified goods exempted. If passing through river, all type of goods are exempted. Just give me half a minute to have a cup of tea. Now come back, my dear friends. Referring to you now, transportation of goods in a vessel through river, national waterways, or inland waterways. All type of goods are exempted. The freight. Transportation of goods in a vessel through sea, through coastal waterways. Only specified goods are exempted. What are they? One, military equipments. Second one, here is the uh, relief material. Relief material, military equipment, newspapers, magazines, register and register of newspapers, agricultural produce, food grains, the milk, salt, and food grains. Food grains includes flour, pulses, and rice. Further, organic manure. These items only qualify for exemption. Earlier, railway equipment was exempted, but now it is omitted from 18 July 2022. Therefore, railway equipment transported in a vessel taxable. What about transportation of goods by Indian Railways? Goods transport also be exempted. What are exempted? Specified goods transportation, that freight is exempted. What are those? 1. Relief material. 2. Defense and military equipment. 3. Newspapers, magazines, list and register of newspapers. 4. Agricultural produce. 5. Organic manure. 6. Milk, salt, food grains, which includes flour, pulses, and rice. These are transported either by rail or in a vessel. Vessel means through coastal waterways. Through coastal waterways, absolutely. Namely through passing through ocean. These items only exempted. transportation of these goods by rail also be exempted. Further, what about by road transportation? Goods transported by road, GTA is a GTA is also be exempted specified items transportation. What goods if you transport in a goods train or in a vessel through coastal waterways qualify for exemption? That goods only qualify for exemption even if you transport by road, issue the consignment note by the supplier called as GTA service. Even though GTA service generally not qualify for exemption, but few items if you transport in that vehicle, that freight is exempted. What are those items? What you are aware of that? In case of rail or vessel, same here. Defense, military equipment, defense or military, relief material, newspapers, magazines, registered and register of newspapers, milk, salt, food grains, which includes flour, pulses, and rice, agricultural produce, and sixth one, organic manure. These are the goods only qualify exemption if you transport by road in a vehicle, though maybe GTA qualify for exemption. As I told you, in case of goods transport agency, goods carriage agency is going to be pay fee to the government. National permit qualify for exemption. I told you qualify for exemption. Further, in the case of goods transport agency GTA, if they provide these services for transporting other than other than specified nature is taxable. However, a exemption has been granted here if the goods belonging to an individual who is an uninsured person. In that case, such supply of GTA to an unregistered person for transporting taxable goods means laptop or the household articles like that is qualified for exemption. Specific services provided by a goods transport agency to unregistered person, including an unregistered casual registered person other than the specified recipient, also be exempt from GST. For example, my dear friends, a case where like this: I'm an unregistered individual. My name is Rafi. I belongs to Tamil Nadu, Chennai. Now I want to shift or relocate my residence from Chennai to Cochin, Ernakulam. I want to relocate. Therefore, I approach GTA to transfer my household articles to Cochin. Who provide these services? Whose transport agency? To whom provided? To an individual who is basically uninsured person. Such freight qualify for exemption. Further, GTA services to government, to local authority, to government agency registered only to deduct the TDS also be exempted. Meaning thereby, simple point to refer here. One example, let us say Mrs. Hanu and Company Goods Transport Agency, which is located, let us say, Vijayawada, Andhra Pradesh. Hanu and Company located in Vijayawada, Andhra Pradesh. Now, here, State Government of Andhra Pradesh, State Government of Andhra Pradesh, they shifted Secretariat from Hyderabad to Amaravati, shifted their secretariat from Hyderabad to Amaravati. While shifting, here, my dear friends, to this location, this GTA provided transportation of goods services. This goods carriers services owned by Hanu and Company transported the goods of state of Andhra Pradesh Secretariat from Hyderabad to Amaravati. Who is a supplier? Here they issue the consignment note. Supplier issue the consignment note. Therefore, we call them supplier of goods transport agency because they issue the consignment note. Here they are the recipient of service. Who is the recipient of service? Basically, if you refer, is the government secretariat. Government secretariat liable to pay GST, not liable to pay GST. Government secretariat, they are not, because government, if they provide these services acting as a public authority, is absolutely not taxable. Therefore, secretariat is not liable to pay GST generally. But we have under the GST section 51 of the CGST. Section 51 of the CGST Act 2017 speaks, if the supply of services or supply of goods provided to government department where the supply of that goods or services contract value exceed 2,50,000, such a taxable supply supplied by supplier of goods or services to government department mandatorily should deduct TDS, tax deducted at source, under section 51 of the CGST at the rate of 1% of the value as CGST TDS, 1% of SGST TDS, effectively 2%. The government department who deducted the TDS and paid the balance amount to supplier of goods or services, the TDS amount what they deducted, they should remit to department. Who should remit the department? The government department, which is deduct the TDS. It is their responsibility that TDS should be deposited in the government account, in the account of the GST. In that case, who are they to pay the TDS to department unless they got some registration? Therefore, the law permitted GST law, secretariat should compulsorily registered, compulsorily registered under GST to deduct TDS and to to deposit the the TDS into government account. Therefore, this government department got registered only to pay the TDS. To such government department, if you provide the services of GTA nature, in that case, such a supply exempted from GST. That means Hanu and Company, when you provide the services of GTA nature to state government of Andhra Pradesh Secretariat, do not charge the GST on your freight, because the recipient here is government department which is got registered under GST law to deduct the TDS and deposit the TDS. This type of registration is irrespective of the normal registration. That means if a person having the GST IN as a normal GST taxpayer, registered taxpayer, that registration not sufficient. A person who is liable to deposit the TDS, then he should obtain a separate registration under the GST in addition to the normal registration, is called as compulsory registration under GST to deposit the TDS. Therefore, is a specific registration. In that case, such a registration has been obtained by the government department to that particular government department. If you provide the GTA services, your freight is exempted from the payment of the GST. Like that, we have not only government department but also the recipient is a local authority. Recipient is a local authority or government agency. What do you mean by government agency? Government agencies, which includes the public sector undertakings, which includes government entity, which includes governmental authorities, like that. We call government agency. So services of GTA to government, to local authority, to government agencies also be qualified for exemption if the recipient registered under the GST only to deduct the TDS and depositing purpose into the government account. If so, GTA supply to them is absolutely qualified for exemption. Further, my dear friends, hopefully you understand this.
Yes, sir.
Yeah. Now coming to tax liability, is important to know tax liability. GST on GTA. GST on GTA is a comprehensive study. Reason, one side you know the exemption. What is not exempted taxable? If taxable, who liable to pay GST? Now the law got amended in saying that GTA, are you willing to pay the GST? Yes, sir. Then you have two options to pay the GST. One is 12% GST you pay under forward charge and avail the input tax credit. Or you pay 5% GST, instead of 12% pay 5% GST. Do not opt the do not avail the input tax credit. Sir, if the GTA not at all willing to opt to pay GST, neither 12% or 5%, in that case, recipient, you are having liability under RCM to pay the GST 5%. Sir, that you not mentioned here, no sir. I mentioned this. Where I mentioned this? Under the reverse charge topic. Under the reverse charge topic. This I simply said 12% with availment of ITC or 5% with availment of ITC. Left to the choice of the GTA. If it is taxable, forward charge applied. No sir, it is a taxable only sir. But GTA not willing to pay tax sir. In that case, by default is RCM, where the recipient liable to pay just. This concept again I will refer to you under the reverse charge mechanism chapter when I am going to refer the GTA services. There I am going to highlight this again. For the time you understand, focus the attention on the part of exemptions. Transportation of goods by road. What are those exempted? By road, what are those exempted? 1. Relief material. 2. Military or defense material. 3. Agricultural produce. 4. Newspapers, magazines, distribution of newspapers exempted. 4. Milk, salt, food grains which includes flour, pulses and rice exempted. Further, organic manure is exempted. Further, if the service are provided to unregistered individuals exempted GTA services. GTA services to government, local authority, governmental agencies where these recipients are required to pay the TDS to department, therefore they got registered. To them provide the services of GTA absolutely qualify for exemption. If the goods are transported in a truck or tempo where the consignment note not required to issue, in that case it is qualify exemption. In the earlier case I referred, no, transportation of goods by road, in that manner it is qualify exemption. Even if the GTA wala paying the national permit fee to department, that is also qualify for exemption. With this, I referred to maximum extent transportation of goods by land route, by rail, or through sea in a vessel, or through a river, national waterways. I covered. Now, transportation of goods. Further, I am referring transportation of goods. Further, I am referring by air transportation. Services by way of transportation of goods by an aircraft, from a place outside India up to the custom station of clearances in India. Repeating, transportation of goods from USA by air up to the Indian custom station in India. Whatever goods you transported by air, such goods air freight exempted service. That air freight exempted service coming to India from outside India by air. Transportation of goods by air from outside India to a place in Indian custom station, up to that qualify for exemption. Further, services by way of transportation of goods by an aircraft from custom station of clearances in India to a place outside India is exempt supply of service. This exemption is valid till 30th September 2022, meaning thereby this supply is, simple to say, this supply is taxable with effect from 1st October 2022. This service is taxable. Transportation of goods by air from Indian customs station to a place outside India absolutely attract the GST. Exemption has been withdrawn. Extension is not given. Extension is not given beyond 30th September 2022. Therefore, it is implied tax liability. is implied tax liability. Further, my dear friends, referring to here, services by way of transportation of goods by a vessel from custom station of clearances in India to a place outside India is also was exempted, but this exemption is valid 30 September 2022. It implied meaning here is this particular service is now taxable with effect from 1st October 2022 onwards. Taxable from Indian Customs Station if the goods are transported in a vessel from a port in India to a port outside India is taxable. Which is taxable? That sea freight, sea freight, sea freight. I am talking about sea freight is taxable. Sea freight is taxable. Sea freight is taxable. Here, air freight is taxable from 1st October 2022 onwards. Air freight. If the goods are departing from Indian Customs Station by air to a place outside India. Further, my dear friends, what about if the goods coming in a vessel to India is taxable or not? A question mark. This point I will refer now. Look here. Now I'm bringing to notice the case. Importer importing the goods from foreign exporter who is from Australia, and exporter from Australia said, I will send the goods to you at a CF value. They agreed. Then foreign exporter of goods approached foreign shipper company, USA based company, to carry the goods from Australia to India. Therefore, service provided transportation goods in a vessel by shipper company of USA, the recipient of service of foreign company, namely exporter of the goods. So the goods in a vessel is shifted to the goods are carrying from Australia to importer who is located in India. The goods came to Chennai port. Now, who is the importer in India is liable to pay IGST on such sea freight set by the government, namely GST department, which is unfair not to levy because cost, insurance, freight all put together CFL import of goods. Then again you are taking the freight to levy IGST as import of services in the hands of importer unfair set by the Supreme Court of India in the case of Mohit Mineral Private Limited case, not to levy such IGST on such sea freight treating as import of services. With that decision of Supreme Court of India, department now only upon the recommendation of GST Council notified saying that we are not going to levy any IGST on such importer. Here in the given case, no IGST on ocean freight in case of import of goods on CF basis, like that notification issued by the government, not to levy on such a freight IGST in case of transportation of goods in a vessel from outside India to India on CF basis, because CIF is a composite supply, principal supply import of goods according to the duty levied. Again, why should we levy the IGST on import of services? So in this manner, this particular Mohit Minerals Private Limited judgment got validity, where the notification also supporting this particular decision. Now come back. We are here. Further, transportation of goods like satellites. As you are aware of that, my dear, we are very much proud of our Indian space scientists who are working day and night in ISRO, Indian Space Research Organization. They are excellent manner launching the satellite in the space outside India. These rocket launchers, the vehicles carrying these satellites launching outside India, if so, qualify exemption. Whoever may be here, the exemption is furthermore granted not only for the Indian Space Organization and this corporation and New Space India Limited, and also further added some more institutions who are facilitating to carry the satellites to launch in the space. That is called the people carrying that goods. No, the rocket launchers called vehicles. Those vehicles carrying the goods. What is the goods? Satellites. Absolutely qualify from exemption. With this, I can say that the transportation of goods sector is concluded, my dear friends.